Hey guys, Caleb Brown, New Planner Recruiting here. Hope everybody is doing well. Hey, this week I want to talk about the pros and cons of bundling or grouping the investment management versus in the planning fee. Okay, so maybe two different services, one fee, versus last week we talked about separating those. Okay, so pros and cons. And again, guys, remember there's lots of different pricing structures. Okay, so you can see our other videos, and that's the point of this series. So when you're interviewing with different firms, it can help sort of understand what's going on, what questions to ask. If you're starting your own firm, you know, which way you might want to go. And just when you're in these interviews, you understand the lingo and you represent yourself well. So should we combine these fees into one fee or charge separately? So let's look at a couple pros and a couple cons. So one bundled fee is obviously more easy to sell, to explain, and it's simpler to explain and sell to the client. So very straightforward. Hey, here's what we're going to do. And some, you know, maybe even throw tax prep in there too. Here's what we're going to do. It's 1% assets under management, or it's $12,000 per year, okay, on their retainer model. So it's probably more efficient to bill this way, you know, versus having to track down, we spent this many hours, or hey, we charge this for tax prep and this for investment management and this for planning, and getting an invoice or which account do you bill out of? I mean, does a client have to write a check, use a credit card? I mean, it can be a little bit messy. So, so those are some of the pros. Okay, I would say maybe some of the cons, some of the challenges is the clients, if they're not paying or don't feel like they're paying for planning, they're not going to value it as much, and they're just going to, like, I didn't want to be referred to. For me, it's if someone refers to me as like, oh, that's my investment person, that's a failure in my mind. I failed, at least in that client's eyes, professionally. So I want them seeing me as their quarterback, their financial CFO, their financial bodyguard, their personal CFO, you know, their family advocate, whatever it is, their life coach, whatever it is. Okay, so if they're not paying for ongoing planning and it's just like, oh yeah, they just look at my investments, that's not the way I was going. And the tendency, I think, is if they're not paying for it, that's where they could go. Okay, there is some studies, and I know KidSys came out with some stuff, and there's some other studies that say maybe that's not as true, but that's just what I found in my career. Market goes down. Okay, you're charging assets under management. If you're not doing the retainer, if you've bundled it under the AUM, market goes down, your revenue goes down. Okay, and a lot of times when the market goes down, people are panicking and calling in, you're having to spend more hours. So you're getting paid less to do more. If you were charging for planning separately, you would still be getting compensated. Okay. Also, I think too, the client sees you doing, they know you're doing all this great stuff for them, but maybe it gets lost in the shuffle because it's not separated out. Okay. Remember, a lot of people think that the investments is everything. That's the full pie, and the planning is just a very small subset. The profession is moving to where planning is the pie and investments is just one small piece. Okay, not everybody agrees with that. So whenever you're out there interviewing, talking with people, you need to kind of figure out where you are, and then figure out where they are, because that's going to help you determine whether you have a good fit philosophy-wise. I hope that was helpful. See you next time. Bye-bye.